In the 1990s, Japan experienced the triple yasu, a brutal combo of falling stocks, rising bond yields, and a weakening currency. It marked the start of decades of economic stagnation. Now that same toxic mix is hitting America, but this time the stakes are much, much higher. Why? Because America's assets are the global financial system. Since April, the US dollar has dropped over 4%, while 10-year Treasury yields have spiked 0.3%. A warning sign investors are losing confidence. Normally, strong growth pulls yields up and the dollar up. But what happens when yields rise and the dollar falls? It means investors are dumping all US assets, stocks, bonds, and the currency, while you're absolutely smashing the like and subscribe button. Japan's crash hurt Japan, but America's crash risks global fallout. The dollar and treasuries are the backbone of the world's economy, used in trade, reserves, and global finance. That dominance, is called exorbitant privilege, has let the US run huge deficits without panic. Until now. Today, US debt is 100% of GDP. Interest payments exceed military spending. $9 trillion must be refinanced this year at higher rates. A recent budget could add $5.8 trillion in deficits over the next 10 years. That's more than COVID stimulus, Biden's infrastructure bill, and Trump's first-term tax cuts combined. If confidence fades, the entire monetary system cracks. This isn't just about rates or deficits, it's about credibility. With erratic policies, surprise tariffs, politicized institutions, investors are asking, can America still be trusted? The last time global trust in the dollar collapsed was 1971, when the US ended the gold standard. Now, some are warning that another regime shift may be coming. If that happens, it won't be Japan 2.0. It'll be something the world has never seen before.